So good morning. On behalf of the panelists and myself, I want to thank MyBioGate for asking us to participate this morning. I've participated in other events that MyBioGate has hosted, and they're always terrific, so I hope you have a good day. It's my honor to moderate the first panel of the day today around the topic of capital from the East. There's a lot to discuss, as we know. And we are fortunate to have a diverse pool of investors here from China or from folks that go back and forth between the US and China. That's probably everybody. And we have a venture capitalist from one of the most storied venture capital firms based in the US, biotech venture capital firms, the founder of an investment firm in China, a venture capital and PE investor, and an executive from a leading pharmaceutical company. I guess it's the pharmaceutical company by market cap. And so, you know, we have a broad range of topics that we'll cover this morning. There's obviously a lot going on. I just want to say that, you know, in light of the fact that there's been so much positive momentum and goodwill built between the US and China in our area, that we need to talk also, as Catherine had mentioned earlier, about some of the challenges so that we make sure that that doesn't get in the way of, you know, our work going forward. So I'll start with introductions very quickly. Myself, so I'm Kim Neary, Managing Director, Head of Life Sciences at Cedrus, a boutique investment firm headquartered in Hong Kong. I manage our institutional investor relationships. We are investors with a USD and RMB fund, as well as investment bankers. And I have been coming to JP Morgan for 19 years. I think James has been coming for 27 years. Yes, and also I'm a proud member of Bay Helix, the exclusive healthcare networking group. So let's start with introductions.
Okay, my name is Adam Zhao. I used to be a scientist, as everybody else. I have a PhD in molecular biology from Pittsburgh, and then went to Chicago, got my MBA, worked for Pfizer for several years, and then I went back to China 2003. So I might be one of the few people did distribution in Chinese market. I had a distribution company in China for medical device and medical product from 2003 all the way to 2009. Then I sold my company. I become a venture capitalist. So I work for Seabridge, Cash, two fund. Then I start my own fund, UnknownMed. So it's a venture capitalist focused on pharmaceutical and medical device. So for my own background, I was a scientist, turned to be executive, and then become a distributor for Chinese market. So that's what I did to acquire the technology, a product from US, and sell it in Chinese market. Then I become a venture capitalist, and that's a lot of company I invested as well. So I'm very concerned about the current issue, because I always believe the technology from US, the market from China is the match in heaven, right? It has to be this way. And there's nobody or nothing can stop it. It's just we have to find a way around it. So I'd like to discuss anything about it.
Yeah, it's nice to be here. Well, this doesn't work, so that's all right. It's nice to be here. My name is James Huang. I'm managing partner of Kleiner Perkins in China. I've been doing venture capital in China since 2007. This past year in 2018, our entire healthcare group within Kleiner Perkins in China, we came out and raised our own fund. So during this past year, we raised a parallel US dollar and an RMB fund. So in our new venture, it's called Panacea Venture. So it's roughly about $300 million in size. So we started to deploy capital in this past year into new investments. Like Adam, I am a scientist by training. I started in the industry in 1986 as a research scientist in the pharmaceutical industry. So I've been here for 27 years at this conference. It used to be so small. But now it's so mega, including many of the Chinese investors that actually come to this conference. My background is also similar to Adam in many ways. I came from research, became an executive, started biotech companies, and became venture capitalist. But I'm actually the direct opposite. I grew up in the States and went to China and learned Chinese there, and now I really enjoy the investing globally across both the U.S. and Greater China region, including Europe. I'm very happy to be here. Thank you.
Hi, my name is Irene. My background is also a little bit different. I am born and raised in the U.S., but my first job with Merck sent me to China in the early 90s to work on a vaccine hepatitis B plant startup. I work with CEC Capital. It's a company that we founded in 2000. We're an investment bank. We do financial advisory services, so we do placements and M&A. We did not focus on healthcare at first because there wasn't really very much in 2000, but I think we did our first healthcare deal around 07, 08 in diagnostics. And since then, we've built a healthcare practice. Worldwide, we have about 100 bankers. We have about 30 focused on healthcare, and we have offices in Beijing, Shanghai, LA, and San Francisco. And the US was really a couple of years ago because of all the outbound investment. We set up an office in the US to help manage a lot of the sort of cross-border business. So yeah, that's a little bit about us.
Hi, my name is Lei Gao. You can call me Jeffrey. So currently I'm working for Harbin Pharmaceutical, which is also known as Haya Group. My title is the Deputy General Manager. I'm responsible for all the strategy, BD, investment, and acquisitions. So we are definitely a strategic investor. We invest directly using cash from our balance sheet. But from time to time, for large deals, we definitely collaborate with financial investors.
Thank you, Lei. Okay, so first question, pardon. Let's talk about your investment criteria and how your strategies have changed, if at all, in the current investing environments in the U.S. and China. You want to start, Adam?
Yeah, see, I used to have the fund. It's a renminbi fund, right? So I invest most of the company from China, but some of the company does get the technology from US. So I did invest in Connect Pharma or Tianjin. They are VIE structures, and it's a US fund. So used to be, I can invest into all those new drug development company. But now, because of the Chinese government, they block all the funds outside, investing to outside of China. So basically, all those approach is blocked. And that did have a lot of effect from our fund investment strategy. And also, some of the company we did actually basically because you guys know, as I said, I was a distributor. So basically acquire the technology from US and sell it into the Chinese market. And that part is having a lot of problem as well. So it does has the problem both ways, both investing from the US into the US company and also bring the technology into the Chinese market, having a big issue.
I think it's working now. I think we're somewhat fortunate. Our general partnership, all the partners are Americans. So we, as a result, our US dollar fund and our limited partner base are also primarily in the United States and some Europe. We don't have any of the CFIUS issues that Adam ran into. I think in China, the biggest adjustment that we were trying to make this past year has more to do with the valuation within China. I think valuation in China reached the peak sometimes in late 2017. As the valuation came down in 2018, we became much more cautious. In fact, as the valuation was coming down, the quality of companies relative to the United States and Europe, it did not improve. In fact, as a result, we were having tremendous difficulty investing out of our RMB fund within China, because relatively the valuation is still much more attractive in the United States and in Europe. We made 6 investments last year. Of the 6, we only have 1 investment in China. and the other 5 were all in the United States and Europe. Like traditional venture capitalists, we are extremely sensitive to valuation, especially as global equity market took for the worst turn in the second half of 2018. We're actually even more cautious than ever. We actually think the environment will not improve in 2019. So therefore, probably the best time to put capital is probably 2020 and beyond. So I think in many ways, farther down. Okay. So in many ways, I think with the CFIUS and the uncertainties surrounding CFIUS, I think we should just let it sort of play out. And as they play out, I think we'll see many dynamic changes, and we'll make the adjustment accordingly. And finally, I think what folks need to be more aware of is more the macro issue. It's not just a trade war per se, but it's the fact that the Chinese economy is deteriorating. It's deteriorating at much faster speed than people are seeing. So underneath of it all, I think the chain of event that may happen into, so you can call me Dr. Doom or whatever you call it, because some of my friends actually call me that. But I actually think going into 2019, we're seeing an economy that in many ways is reminiscent of what was happening during financial crisis within China. So we are waiting for Chinese government to take appropriate action to really improve the economy, making sure the money is available to many of the private sector, not just the state-owned enterprises. So when that does happen, we think we have better hope that within China things will improve. Otherwise, we will continue to deploy money primarily in the U.S. and Europe.
It's a good thing you raised your capital already. Okay. As an investment bank, and we have our origins working with U.S. dollar funds in the very, very beginning. We retooled as the RMB got stronger, working with a lot of domestics. We're sort of investor agnostic, so we've worked with U.S. dollar funds, RMB funds, worked with financial investors, and then more recently sort of the strategics and also the A-share companies and the China sovereign wealth, which was very popular last year, probably not so popular this year. So, I sort of feel like the market is shifting incredibly fast. To James's point, whether it's sort of bound by CFIUS or not bound by CFIUS, I think one sort of major key point is, we've been dealing with, let's say, China regulatory for a very long time. That's why we have the VIE structure and all these other things, and now we have to deal with the US regulatory, which is sort of a different hurdle. So whereas I know there's a lot of, when James says, okay, let's let it play out, I think, one concept is that, there's always going to be a certain level of business demand, right? We know that, let's say, if you're going to do a trial on lung cancer, China's the best place to be. And the China market has massive demands. That's what was driving a lot of this searching for pipeline and products. They really, really have a market that they need to sort of fill with products. And, on the other side, I think the global companies used to sort of not really pay much attention to China, but now China as a market is just undeniably critical. So, what can you do? I think that underlying business demand is always going to be there, but now people have to start to think about, what is, how is CFIUS going to impact me? So now all of a sudden the cost of doing cross-border deals with the US and China specifically has increased. So that means like for certain things, they're still going to try to, it's not that deals cannot be done, but then it requires a lot of structuring, a lot of figuring out how to do it. It's just the hurdles are bigger. So used to be the US companies would be like, okay, let me get a free option. I'll take China money just in case in the future I might want to have some friends and guidance. Whereas now I think they have to be a lot more deliberate. So, I don't want to not say that CFIUS is not creating a lot of hurdles. The US companies are like, I don't want to deal with it. Chinese companies are like, is it US or non-US, right? Because the CFIUS hurdle, if it's non-US, there's a lot more friction if you have to try to come to the US. So I would say for everybody on this panel, the way it's impacting is very different. and individual, okay? And my only thing is, if you are going to consider, you obviously have to get good CFIUS lawyers, get good people who can understand the structure. Before, maybe a US company might take US dollars, now they might license, they might joint venture, they might find other ways of partnering or find a third party to help bridge that friction. So that's a long-winded answer, but
Okay, it's challenging for us because Harbin Pharmaceutical is a state-owned entity. And also we are becoming the largest shareholder of GNC, the sports nutrition dietary supplements companies in the United States. We went through this CFIUS process very quickly. We got approval just within a few weeks. But yeah, that's a while ago. Yeah. But if today we take this opportunity again, and you can understand what we will be discussing during our board meetings, right? So probably we wouldn't take the shot. It definitely will affect us. I just joined Harbin Pharmaceutical in September. Before that, I was working with Tasty Pharmaceutical and Tasty Capital for 3 years. So we did a lot of deals in Europe, United States. At that time, CFIUS is not concerned, even though we know this is just fairly straightforward process. We just follow the rules, that's it. The only concern at that time is the Chinese regulations, like NDRC, like SAFE. How can we invest? How can we get the money from inside China to outside China? That was our concern. But as Irene just mentioned, we just follow the rules. And we have issues in any geographic markets like India, like Europe, like China. We have to deal with political issues. So let's see it, right?
Terrific, thank you. So let's just talk real quickly. I just want to get back to sort of the challenges, right? So we have capital controls, valuations, obviously this trade tension, CFIUS, FIRMA. Any other thoughts on that before we move on? Because my sense is, well, I understand there's going to be a discussion about the technical elements of particularly the regulation. I think there's some underlying sort of tension that's brewing, and I just want to see, like, from those of you who are in China or go back and forth between China a lot, are you feeling that same kind of tension, like, do I really want to be doing business with Americans while this is going on? I mean, we've certainly seen that there's an increase in interest in European companies, for example, by Chinese investors. Any, just...
Well, I'd like to take a first shot on that. I think, like Jim said, it's for both of those two crises. One is the valuation in China, the market is going down, and then another is blocking all the investment into U.S. company.
Yep.
I think they might pose an opportunity as well, because the market, like I said, I mean, the technology from U.S. and the market in China is the match in heaven. I still believe in that. I think it's still the trend. Nobody can block it, but any of the company or the fund found a way around it will be in the advantage for the future. And because also one thing I like to discuss with Jim is the 2007, 2008 and 2009, that was an even bigger crisis. Right. And lots of people talk about it. Actually, a lot of my classmates from Chicago, they went back to US from China after a couple of years, and then a couple of years later, they regret it because the Chinese government going back up after a couple of years. So I don't know whether it's going to happen again, but maybe right now, see, my fund, we just rose 500 million RMBs, and we are thinking maybe right now is the best time to invest into China.
So I just stress that quickly. Back in 2008, 2009, I was at Vivo Venture. I made all my investment at Vivo Venture during financial crisis when nobody's going to touch any company.
That's smart for you.
All the great company P multiple were in the low single digit. And everything I invested in were big multiples, and we made tons of money during that time, right?
Yeah.
So, but this time I think the market is slightly different. Than back in 2008, 2009, because I think 2008, 2009, they're not going to go too much detail, but a lot of it is, with the exuberance within the United States, with the mortgage, a whole bunch of mortgage-backed security issue, whole bunch of things. That was more, and then, but China back then, I think government had a lot more tools
to respond. So during that time, what we saw, at least within China, when I was there, was that despite what's happening in the United States, Chinese government were able to act quickly to really to stabilize the economy, the financial system, but I think this time around it's not that simple as it was back then. This time around, I think there are a lot of the more structural issue and other macro issue that need to be addressed. But going back to just the FIRMA issue, why I was saying so let it play out has more to do with the fact that U.S. government was asking for a lot of input, even as recent as December. So a lot of changes are still coming. In fact, because the original regulation was somewhat vague, and they're asking more clarification, and I really think there are going to be even more restrictions coming up this year. And that's why I'm a little bit more cautious as to what to do until I really see things more clearly. But one thing's for sure, when you have 1.3 billion people growing to 1.4, 1.5 billion people,
And
then
getting
the
wealthy.
market is so big, this market you cannot ignore.
Exactly.
The
Yeah.
question is venture capitalists is when do you actually step in?
Yes.
Step in really big. So all I'm saying is, I'm staying put until, and make sure the dry powder is there until right time to deploy. But
Yeah, and I have to say that we also cover tech and consumer in our business, and I would say that those guys are hurt a lot more in terms of with sort of the economic downturn. I do have to say, we have been actually still closing quite a few of our healthcare deals, and what's going to happen is the valuation's coming down. What that means is all the dumb money. There was a massive RMB tightening, so a lot of the RMB is no longer there. So the RMB was driving up a lot of the valuations, and so what I fundamentally believe is the good companies are all still going to be there. There's still a lot of development and good companies there. It just means that the companies that shouldn't be there and shouldn't be able to be raising at these incredible valuations are not going to get there. So it's in some sense it's a good time to, if you're smart about what you're investing in, all the dumb money is no longer there. It just means that then the pricing should be coming down, and we'll see that. But that said, we do feel I do agree with James in some sense that this time feels a little bit different from the last crisis. But on the other hand, actually, the Chinese have also never really, in my opinion, dealt with a true crisis, meaning people still think, oh, the real estate prices should be dropping and dropping and dropping, and they might stay steady, and then 6 months later, it just pops back up. So, we're ourselves sort of stealing for maybe a tougher year, but at the same time, we're still seeing on the healthcare side that deals are still getting closed, and there's still a fair amount of optimism on the healthcare side.
Yeah, because I just, changing my job, made transition from, kind of VC, PE fund to a corporate investor. And we are still working very aggressively with a lot of international companies, but for different type of deals, because we know the healthcare market has some pressures. I mean, in China has some pressures, but we definitely are a little bit more optimistic compared to other sectors. So we are definitely still trying to close deals with international companies, but purely focus on their product. I mean, the product that we can really launch into the Chinese market within a period of time, a reasonable period of time. Let's say maybe 2 to 3 or 4 years, so we can grab the market share. So that's exactly what we are doing.
Thank you. That's great. Yeah, I just want to mention, so BIO in Washington is working tirelessly to educate the administration on, the value of what we do here in the life science industry and trying to carve us out of the broader sort of, issues between the U.S. and China. And I think it's really important for all of us to sort of, stay together, keep working together, sharing ideas, letting the capital flow, that sort of thing, and educate where we need to. Because for Americans, you should know, I mean, I was in China for a month in November. I met with 80 investors. Interestingly, you might find 2/3 of them are American citizens. Okay, so they're either Chinese Americans or they're returnees to China, but they are American citizens. And I think that's why we've been able to make so much progress between the two countries in the area of biotech and life sciences, because there are just so many commonalities. And just one other thing that we should be aware of, that 2/3 of those investors that I met said, introduce me to European companies. We're going to stay away from the US for right now. So, keep that in mind.
But I actually adding to that is I think there are opportunities, because also as a VC, I believe if you are looking to 5 or 7 years ahead of this, there are going to be US technology and Chinese market, right? So it's going to be there in 5 or 6 years. And now maybe the right time is not everybody, like you said, most of them stay away from this trend. But if you can find a way to go through these hurdles and get a deal done, maybe you are in the right position, or that's what I believe.
Yeah, and that's a good point. So on to that, Western companies until the past 3 months were really, really interested in finding strategic partners and investors in China, and their boards are actually expecting them to do so now. So what kind of advice would you give Western companies, right, that are looking, for investor strategic partners in China right now? You wanna start?
Yeah, I can take a
Thanks,
stab at
Lei.
this.
Thank you.
So we talk with a lot of international companies. So we position us as the best commercial partner or investors from Chinese market. So I definitely have some insights on this one. So on the other side, you definitely need to do your homework. You need to check out the reputation of your potential partner in China. Of course, all the statistics, financials like market cap, revenue, profitability. And also, you need to know those decision maker personally, so you get a sense who you are working with closely, especially if that's a family controlled business. I don't understand what I'm talking about. And I think the second thing that under current circumstances, your board of the international company should definitely have your China's strategy in place. Just elaborate on what your Chinese partner are going to have if they become the investor of the U.S. company, the safest process, etc. And what else? Oh, you definitely will know your potential partner very well during the negotiation. So if the Chinese partner don't negotiate aggressively or heavily on the backup terms like the royalty, milestone payments, you need to be very careful, because probably they just want to get this deal done to boost their market cap. They don't really want to launch your product in the Chinese market, because the market dynamics are quite different. So the profit sharing mechanism is quite different. You need to have a very good sense for things like the promotion, the marketing cost, the manufacturing cost, etc. in China. That's quite different.
I had to think a moment about how to answer this. I think, in China, we've always been very, we're used to thinking about who is the right partner and what is their background and what can they offer. So to that extent, in terms of doing your homework, I think there's certain, in this climate currently, there's certain investors that would be much more difficult to maneuver with. For instance, let's say, I'm sorry, Jeffrey, but in terms of state-owned versus private, some are much more commercial, some are much more government-ish-y. So I think you really have to know what your objectives are in terms of trying to penetrate China, what they can offer, and then sort of what the level of risk might be in terms of running into any sort of hurdles. I mean, I think we always talk about sort of ODI issues. That was a very traditional issue. Do I have to try to get the money out or not? And now with the CFIUS and regulatory issues, you have to really figure out, is this someone that is going to be super sensitive or maybe less sensitive? And to James's point, he's very China savvy, but maybe the sources of funds are different. The types of investors feel a little bit more different, and so certain investor profiles are maybe a little bit more sensitive. So you really have to know who you're going to partner with, do your homework, and don't be hasty in terms of trying to rush anything with any partner.
So as I said at the outset, we don't have the CFIUS formal issue, so we're slightly different. So our advice typically with the American companies that we work with is that China is such a big market, you should not ignore it. You can do clinical development cheaper, faster, but what you lack is a infrastructure and team on the ground in China to coordinate your clinical trial activities. So what we typically do is we invest in the US-based company. We help them set up a subsidiary within China. And once they do, and our team within the Greater Shanghai region, we will help them do a lot of is putting the clinical trial together, finding the opinion leaders, the investigators, the hospitals, depending on the therapeutic area they're in. We know all the top thought leaders. So we work with them and we work with the Chinese FDA to move their clinical program forward. To the extent they need manufacturing facilities, we help them obtain those financing. And if needed, we deploy from the R&D fund locally to help fund their subsidiary level within China. And so this is the advantage when you have both US dollar and R&D fund. You can really help them facilitate a lot of the development progress. So what our advice is just don't be afraid of China and the regulation. You can't control the political environment, right? So don't control what you cannot control. But you as a company, you can control your own destiny, which is in our industry to create value, is to move your products, your technology forward into some point of value inflection point. To that extent, we as investors, with our resources, our job is help you realize that. And so I don't worry about Trump. I certainly don't worry about what's going to happen in the next election or anything else. I just help the companies to figure out how to continue to build their infrastructure and move the programs forward. So that's our typical advice. Just don't get distracted by this noise outside.
Yeah, that's very good, I think. And I think just as a conclusion that if you are looking for partners in China, just focus two factors. One is stay away from the state-owned or but I mean, as a commercial, we are the private company, and so don't get into trouble with the U.S. government. That's what it required, right? And then another is to go with somebody understand the Chinese market. So we try to position ourselves. I have actually, as a commercial, I own a diagnostic company in Chinese market, and if anybody have a diagnostic technology and want to go to Chinese market, just talk to me. Right.
James makes it sound so easy. Oh, just go and do it yourself and enter China and do the clinical trials. That is one approach. There are people who, if you look at it, you can take China investment, you partner with a Goliath, you license, or you do it yourself. I mean, do it yourself is done. It's not terrible. It's not as easy. That's why you might want to find somebody that can help you. But that is one approach. It's not quite as simple. It's quite challenging, but that is an approach you can take.
Thanks. Yeah, and much less important.
Yeah, I just want to quickly comment on here. So we are in the process of having a new strategic investor. So we won't be a state-owned entity for probably fairly soon. Yeah. But still, I'm a deputy general manager, so I'm one of the decision makers. So I'm a little bit surprised when I joined Harbin Pharmaceutical. I think the decision-making process is faster, even compared to Tesla.
Terrific, thank you. So we have a little bit more than 10 minutes to go. Do we have questions in the audience? If not, I have other questions. Please, is there a mic? No, we'll take a mic. Wait. Yeah,
in case. Question to James in regards to his strategy of investing in U.S. companies which bring business to China. So it does require probably an elaborate strategy of subsidiary because what we learned throughout last couple of years of engagement that mainland China and Hong Kong have different regimes, etc. So how do you structure those kinds of deals? Could you give some examples of companies who structured their subsidiaries right?
So typically, U.S. companies would set up a subsidiary in Hong Kong underneath the Hong Kong WFOE. You set up another WFOE within China. That's a very straightforward way to do so. That's how we typically structure our company. Does that answer your question? Not in mainland China. No, yeah. So the way you do it, you within the company where you are at, set a wholly owned subsidiary in Hong Kong. With underneath the Hong Kong, you set up a subsidiary within China thereafter, and the capital can flow quite nicely from that way. But my point is that even the current environment, we typically use our RMB to deploy at the Chinese subsidiary level. This way that you don't have to worry about capital flow in and out. So we have ways of creating the sort of structure that allow the company to take both currency.
Any other questions? No? Okay, so I'll ask one more question. So in what particular areas of healthcare and life sciences is China thriving that could, sort of impact the world and things we should be excited about? Please. Irene, you want to start?
Yeah, I was going to say, I kind of smiled because, I was looking at there, it says global pharma, but actually we do pharma and biotech was only a business that started for us about 2 or 3 years ago, to be honest. We also do medtech and we do services, so hospitals and clinics, and sort of digital healthcare now is sort of a new category. I was kind of smiling because the wind shifted so fast in China, and everybody knows biotech was this area of massive investment, and then all of a sudden there was, in my opinion, sort of an overexposure, and the valuations were so high, and then of course we had the Hong Kong market, and all of a sudden there was a massive shift into services, right, back into more traditional life science hospitals and clinics and sort of more tangible services. I think that in general, all the sectors of healthcare are growing quite rapidly in China, although, relative to the US, medtech is still always sort of much smaller. Biotech is this burgeoning new sector, and services has always been sort of a little bit more difficult in terms of trying to take a slow boat and trying to make it more commercially viable. So I would say, to be fair to all the sectors, they are all actually growing quite rapidly. It's just that what becomes trendy changes, right? So now people are thinking about, people are still thinking about sort of AI and digital healthcare, very small. But there was a very, very pronounced shift, I think, from biotech into sort of more traditional businesses, which is like services, and maybe medtech, which is a little bit less risk in terms of investment. Yeah.
Well, our fund invests into biopharmaceuticals and medical device and all across the board, but my focus is in the molecular diagnostic. I think this is one of the area has tons of opportunity in China because the valuation in US is quite low. I was very surprised. Lots of company, I think they have very good technology, but the valuation here is very low. And comparatively, their competitor or their collaborator, per se, in Chinese market, the valuation is very high. And also I think the pharmaceutical market in China is having short-term pains because of the government regulation, 4+7, all those the government purchases, but the diagnostic might be going to a boom, and I think those are the opportunity we are looking into. So if you have anything in that, I'd like to talk to that.
I think from patient perspective, if you look across the consumer level, whether you are selling drugs, you're selling devices or diagnostics, China's market is so big, and there's the unmet medical need is so great. The gap between the standard within China versus the United States is still incredibly large. So I think the opportunities is tremendous across the board. You think about Merck and Bristol Myers Squibb that sell PD-1. My God, there's a backlog. They can't make it fast enough to supply to the Chinese population at that exorbitant price that they're charging. So I think if you just look at that level across the board, it's tremendous. But from the investment perspective, you have to be much more cautious about which sector you want to invest in. I agree the molecular diagnostics sector is so interesting. Across the globe, the valuation is quite low, except in China, which is exorbitantly high. But yet, within China, you can exit. If you have company in this space, it's very difficult to exit. So there, I just think what you're doing makes sense, because you take the technology you sell in China, you have a distributorship. That's a great business. That's really great business. But if you're doing traditional R&D in the tool diagnostic space, I think it's much harder from the investment perspective to get to the end. But overall, like I said, I'm so excited still about the Chinese market and whether no matter what area you're in, it's people. What people are thinking today and they're projecting across the board, whether they're analysts or, I think people are truly underestimating. I can tell you, 10 years from now, when I'm in my 37th year JP Morgan conference, if I'm still here, I can tell you guys, that market that you're going to be looking at in China is going to be bigger than anything you guys ever read in the public or by any bankers, analysts. People are truly underestimating. So don't be afraid of China. I think it's going to be really exciting.
Terrific.
Yeah, I think you guys all mentioned everything. So if we just want to invest in the domestic market, I mean in China, so probably I will say healthcare IT, big data, AI, and maybe some innovative drugs, just for some specific indication like oncology, maybe immunotherapy, not for some small indication like orphan disease, because all those sectors, they have the direct access to the huge population, the patient population. China is already the second largest pharmaceutical and healthcare market in the world, and it's still growing. And especially the population is aging. So they have a lot of healthcare problems like diabetes, like metabolic disease, like oncology. But we need to keep in mind, in the Chinese market, the public insurance, the Medicare system is broken. I shouldn't say broken, but definitely under huge pressure. So the government is trying everything to cut down the price. As Adam just mentioned, the 4+7, the procurement with volume. So they cut down the price from 30% to almost 50%, then to 90%. That is disaster for many established companies like Harbin Pharmaceutical, like all those major pharmaceutical companies. But that's a good thing for the innovative drugs, for the innovative companies. So they definitely squeeze out some, some rooms for the innovative biotech companies. So definitely I will say maybe for the next, not 5, maybe 10 to 20 years, there are some emerging, very large, very good, promising biotech companies coming from China.
Terrific, thank you so much. So we have 2 minutes left. Just ask for questions one more time. No? Okay. Any parting thoughts? No? All set? Thank you. We're a little early. Thank you guys so much, and thank the audience, and particularly to our friends and colleagues from China. If you've come all this way, thank you for being here. We hope you enjoy the day and have a great week in San Francisco. Thank you.